How does one generate good returns? And again, various managers are going to go about it in a different way. There's no right or wrong. But at PSG, we like to look at stocks on an individual bottom-up basis. And the concept that we're looking for in each case is this concept of asymmetry, and in particular positive asymmetry, where if we're buying at that dotted line, we think that our clients, even if we're wrong, will have relatively limited downside. But if we're right, the upside far outweighs that downside. And conversely, if we look at a market at any particular time or any stock idea at a particular time, where would we be most concerned? We'd be most concerned about stocks where we think expectations are very high. And if the company fails to meet those high expectations, the downside far outweighs the upside. So where do we find positive asymmetry? Where do we find stocks for our clients that we think offer limited downside and healthy upside? And the most successful way that we've gone about achieving this is to invest in uncrowded areas. What this speaks to is a willingness to invest in stocks or sectors or regions where there's a lot of fear around, where prices are at rock bottom levels. It also speaks to avoiding the areas that are very crowded, very popular, well-owned with high expectations, because there's much more opportunity for downside. Bernstein, the US research house, has done some fascinating studies on this concept of crowding and what it means. It's research that we review quite closely, and their quantitative assessment of crowding indicates that if you invest in the least crowded part of the US stock market between 2000 and 2017, your subsequent 24-month returns have been 6% higher than the market. And if you'd invested in the most crowded part of the stock market over that same period, your subsequent 24-month returns had been 7% worse. So the obvious question is, okay, what are the crowded and uncrowded parts of the market? And using those same quantitative factors, it should come as no surprise that by far the most crowded region in the world is the US, and the least crowded areas in the world are the UK, emerging markets like South Africa and Japan. It should also come as no surprise that PSG Asset Management owns fewer US stocks than we used to in the past, and we've been shopping for new ideas in the UK, domestically, and other emerging markets, and in Japan.